Happy Friday, traders. It is 8 a.m. Chicago time on the 11th of February, 2022. This is episode number 2170. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at where we are overall, we see a market that has some jitters. You can call this the taper tantrum still. The saga continues. Yesterday, just um, interesting is not strong enough as a word to say. As you recall, we came in the morning, and I had talked about this at length. Won't go through it again, but I had completely dogged the CPI release, just completely flubbed that up. Was down pretty good coming in. Staged a little bit of a recovery. There's some really good rotations in there, but I got to be honest with you. I have to recognize when I'm not in the flow, and I have to be conservative. So cut size was more selective, as I discussed during the session. But overall, the run up was incredible. We opened at 45.17 in the S&Ps, and we ran all the way up to 81.75, with the SOC coming out at 45.77. So we had this big run up, and then Bullard came in later on and just basically dumped some ice water on what looked like a hot buying trade by saying that he's for a 50 basis point raise, and that was a surprise to the market. The market turned over and just absolutely slammed the bid, and pushed all the way through to 44.76. So about 106 points of range yesterday. 106 points of range in the RTH in the day session. So that's where we are. The CPI was the highest it's been in apparently 40 years. So we're back to the 70s. Yay, 70s. And the rest of the markets that opened after the S&P closed were feeling the aftershocks this morning. We had some numbers out of Germany. Germany reported in-line inflation at 4.9%, so pretty muted. GDP out of Great Britain was a little bit weaker. Trade balance was much better. GDP growth was weaker than expected, 1 versus 1.1%. And the expectation this morning by traders on the BOE interest rate change, there's some betting and some emphasis that the BOE is likely to make a 50 basis point move. So next month's FOMC, ECB, and BOE are going to be so tightly watched as the market is throwing in the ring the possibility of a 50 basis point increase, and also more raises through the year. It used to be 4 to 5, now it's 5 to 7. And so all of that translates into a market that is very touchy and volatile. So that's where it distills down to us being traders to monitor this and trade what we see, not what we think, not the whisper numbers, not the nonsense that can be distracting, which I allowed myself to get caught up in yesterday. A lapse, but it'll be fine. Today, those are the key elements there. The US CPI being much higher than expected. So the aftershock continues. Bullard with the 50 basis point view on tapering. And then traders betting on a 50 basis point rise by the BOE. I told you what the numbers that came out overnight. We have Michigan sentiment. Normally, this could be a mover. Normally, this release is a mover. It speaks to several levels. But for today, I think the inflation component is going to be very important on this Michigan consumer sentiment prelim numbers. So pay attention to this 10 o'clock release. It is likely to help shift things around. And then we have the monetary policy report at the same time, which is a lower tier. So that's where we are. Looking across the board, crude really came off strong yesterday. It had almost a $2 move down, and has taken most of that back. Crude is still in a capitulation around the 80 figure. We're talking about WTI, not Brent. And so crude is up 107 basis points. Copper's way off. Silver's way off. Gold is holding its own. Gold is still holding a range, a wide range. The S&P in a multi-distribution profile. The S&P built a very prominent point of control at 44.75. Yesterday's low is around that area, 44.76 or so. So they traded this low quite a bit the overnight session, and then we ran up. We put in a higher low and we ran up. We're going to look at that in a minute. The S&P has traded 266,000 contracts, which is elevated, and the inventory was on the S&P. The inventory was about 90% short, and now we've traded a fair amount above settlement, which is at 44.97 and a half. Currently trading at 45.02 and a half. With a high of 45.0675. And if you recall, the S&P 45.05, 45.05, 45.05, 45.05. That's the key number in this area. That is the magnet. That is the balance. That is the fair price still. And we keep whipping away from it and coming back to it, and whipping below it and coming back to it. That's where we are. The range is pretty strong, 52.25 points, and the close to close sigma currently is 60.5 points. So close to close, the closing price from yesterday's 4 o'clock, the settlement, closing and settlement are not the same thing in futures, in case you didn't know. Closing price is just the last print before the market closes. Settlement is the VWAP of all the trades in the last 30 seconds of trading. Different products have different settlement procedures, but that's the procedure for the indices, the ESNQ, YM, RTY, and so on. So those could be two different prices. And the difference in price from day to day could be as much as 60.5 points currently, which is quite wide. It's a lot of range for close to close to play in and still be normal. So pay attention there. That's where that stands. I'm going to just do a quick review here. I want to keep this as short as possible. I always say that. I'm unsuccessful most of the time. Let's get rid of our levels. So this is yesterday. A lot of rotations, You're looking at a 1 tick by 8 PNF, 1 tick by 8 point and figure chart. And you can see we open and we go down just 3 ticks. This is basically an open drive. We have just no interest in selling at all, completely responsive, immediately long, and it pushes all the way back into the prior range. It pushes back into, managed to get on the long, thankfully, a little bit of redemption there. And then it managed, surprisingly, to actually push through the 45.54 into the prior point of control, which was at 45.65. And it managed to almost get to the prior session's high. Remember, the prior session was a gap up and a bounce day. And from 54 all the way to 82, and we managed to get all the way back up there despite a terrible CPI number, supposedly. And then we go into the sideways trade, but the sideways trade is a 35-40 point range. It's about a 35 point range before Bullard comes in and really knocks us down a notch, and we finally fall out of the range and we hold this Let me clean up the chart. We hold this, which is a nice little bounce off of the full session mid. The full session mid also tested, full session VWAP tested back there. Beautiful setups right there. And then we finally break through. We have a small pullback to the mid, and then we take back to the mid very cleanly before we run off and get back into 45.05, 45.05. I'm going to constantly say that number, 45.05, 45.15, 45.35, and so on and so forth. These are really important areas, 45.65, and then we get back up into 45.86, okay? So we took back the SOC, which we ran away from in the overnight session. We just triggered at 45.77, and boom, we hit it, and we went straight down. There was a sweep of over 1,000 contracts on that CPI. The book got very thin and very algorithmic, and it moved away. So it did not come back and test that 45.77 SOC, the scene of the crime. SOC, scene of the crime. It didn't come back and test it before continuing. It just went right off, and then we ended up testing it immediately after dropping some 40 points. So really surprising effort there. It's actually 60 points by the time we opened. And then we ended up taking the low, the overnight low out, and coming right back down into last week's settlement, the settlement from last Friday at 92.50. We came all the way back down here into where we were last week, and we ended up holding the high on the closing swing highs, basically the MC point of control at 45.05. And so we closed around the 4,500 century figure, a very calculated type of trade. Coming into today's session, this is a one tick by 20. All we did is continue the selling, which was expected. We had a neutral, almost a neutral extreme down close, which is an important type of close. We had a neutral extreme down close yesterday. We broke the IB high, broke the IB low, and finished well below the IB low. I define that as the lower quartile of the range outside of the IB. And so what do we expect? It basically tells us that we had probably unsuccessfully, we did not successfully find sellers or the buyers. And so we are likely to advertise lower. And then we finally get this bottom, put in a higher low here, and then explode to the upside to bring us back into line with settlement. So the S&P is basically unchanged. The S&P change from yesterday's settlement is 1.5 points currently. So we are unchanged, and we are right on top of this beautiful MC point of control. Just trading porn right there. So we are stuck here between the 35. We're stuck between the 35 and the 45.35 and 44.50-ish. This zone here, we are stuck in here. And if you recall, I talked about this for several trader bites earlier this week, that a push higher is going to struggle. It is really going to struggle. I showed the profile, if you recall. Show you it again, just because I want you to keep the big picture in mind. I showed you this profile here. Oops. I showed you this profile here, and I drew in the fact that we are in between these two big key areas. And in here, we are likely to struggle and scramble and struggle and scramble in a wide volatile range. And that is exactly what the week has done. That's exactly what we did. We went right back. We tried to break away from this box, this little yellow box in here with this gap up. And then yesterday, we left an excess high, and we came right into the box, 45.05, 45.05. Just keep saying it. 45.05. So what does that mean for today? So what? What that means for today is we are opening in a very balanced, very likely noisy area. I expect, depending on how the Michigan sentiment number comes out, I expect that we are very likely to see a market that has still a relatively wide range. I'm anticipating about 50 points of range or so. We've already had 50 points in the Globex session, but I'm looking for about 40 to 50 points tops in the RTH, and I'm looking for this thing to just ping pong around here. So I'm looking for it to kind of fight these areas, these three areas. So I'm looking for, how does it treat the low volume node? This is the low volume node right here. See it from yesterday. It's also the mid at 45.35. Okay, 45.35 takes us up to 65. We want to see, how does it treat that 35? Does it go up and come back and lower high and starts to tilt over, in which case we want to hit the bid and look for it to come back right back to 45.15 as a pausing point, and then 45.05 return. And in that case, we have a 30-point trade with about 5 to 6 points of risk, something like that, hopefully. If it gets through the 35, then we're looking for it to push hard into somewhere around 40.42, pull back into the 32.35 area, look for a turn, look for the market to start to lift, get long, look for 65 from about 40. That's 25 points, 5 points of risk. So we're looking at a 5-hour trade with scale outs. It drops it to about a 3-hour trade, which is what I usually go for. Things like that. Have I lost anyone? Are you just completely lost by all the terms? I feel like I'm talking too quickly, and I feel like I'm talking as if everybody knows what I'm talking about. Just if you are lost, just hang in there. I would strongly recommend you join Convergent Trading, because we cover this stuff till we're blue in the face, and this is the base. This is the base of trading. It doesn't matter if you're trading bonds, notes, gold, crude, nat gas, RBOB, DAX, doesn't matter. It all follows the same script, the auction script. So here's a review of what we've done for the week. So I like to look at this on Mondays. Sometimes I like to look at it on Fridays and look at what we've accomplished since last week, since the beginning of the month. All we're doing is snaking around that monthly VWAP. The monthly VWAP is at 45.17. What is the significant level here in the area of this VWAP? 45.15. That is a structural level, a stock zone, a structural level that is built on the auction and the profile, and it's in confluence with the monthly VWAP. You have the 20 day moving average in the area. Yesterday we tested it from above, and there's just a lot of structure here to trade off of. So essentially all of the indices, so this is the Dow, this is the NASDAQ, and this is the Russell, and they are all in a, just so that you can keep the big picture in mind, unlike what we did in January where we got way ahead of the VWAP. What we have here is balance, which is exactly what I just said, right? On the composite, you have those two big areas, and we expect it to balance in between. Despite the news, it is still balancing in between, and we're expecting that to continue until the FOMC, until March's FOMC, where the market regime will further get clarified, and we are then likely to respond pretty aggressively. The FOMC next month is going to be gigantic. So this is where we are. We're going sideways as we sit here. So this chart, again, is a 4-hour chart. All sessions on Edge Pro X, my trading execution platform. A very simple thing to reference. You can see that the bonds and the 10 years still staying ahead of their VWAP on the sell side, with a 10-year breaching 2%. So that's where the risk is. That's where what the market's paying attention to, the fact that the 10 years just keep going lower in the futures, which means yields are going higher. Let's take a look at what's expected for today. Sorry, not a short one after all. All right, so this morning, again, we're opening right on top of 45.05, right in the lower range of yesterday. I'm expecting choppity chop, looking for chop here. We have some distance to the VWAP in mid, expecting it to chop, expecting the 45.0675 overnight high to be taken out, but I'm looking for this thing to revert back. I'm looking for it to drop into this 44.86. So as soon as we open, the VWAP will accelerate towards the 86. That's what's expected because the volume on the open is higher and VWAP is built on volume. And then because we are likely to take out the overnight high, I'm expecting the full session mid to move towards 86, and that becomes the first key trade. We have some support, some structural or price action support right there. This becomes the first long of the day. I'm looking for it to bounce back. So somewhere between 45.11 and 45.86, about 30 points of range. And then I'm looking for this thing to base a little bit before it starts to stretch to the upside. That is a 50-50 guess. The secondary scenario is exactly the same. An open that tests higher, moves down into 86, comes back to the middle, to the open, and then gives itself up to the overnight point of control. For the overnight point of control stat, the settlement stat will likely be done. The overnight stat will likely be done. And then we hold the lower end of the range in this low volume zone here, which is between 44.80 and 44.75. And I'm looking for it to kind of sit here before it rallies into the close. I'm looking for positions to be balanced into the weekend as they usually are. Those are the two key scenarios today. The map, as indicated, 15 above. Then we look at 35, right? And then we've got these minor levels, these thin price order flow based stock zones, but then it's 54 with a key number up here at 65. 65 being the upper bounce zone. I don't expect us to get there today, but who knows? I didn't expect us to bounce as hard yesterday as we did. So know your map, know what prices matter on top and below, and just don't get caught in the little blips in the tick chart. Focus on your price map and trade off your price map. You're likely to trade less and you're likely to trade better. Good luck.